Welcome to Angel Impact, the official podcast of the Wisconsin River Business Angels. Episode 22, Key Differences Between Angel Investing and Mutual Funds, Part 3.
Oh, they can invest in small companies. They got so much capital, they would overwhelm any small companies. So they can only invest in big companies that probably are size. If they got a pot of money that's $1 million, they probably can invest in something that's less than $100 million. Or an angel investment could say, all right, 100,000, I can invest in $1 million to $5 million company. So they could not invest in those small ones.
That's right.
They would overwhelm it.
And they'd put too many eggs in that one basket, from the company's perspective.
Yeah, sure. So what I actually hear you saying is that angel investors are very important for companies of a certain size because the level on which you're capitalizing sort of guarantees that you're going to get a variety of different angel investors and therefore diversify the equity holders, right?
Yeah, from the company's perspective, they do work with multiple angel groups, multiple investors.
Yeah,
and I think there may be another graph that we may or may not have posted, but that's the continuum of funding for a business as it grows.
Yeah.
And where angels play, and we're always in that early stage. Although some of them, again, they'll hold while that company grows. But there are other, there are other big players that come in where you get to that success as a business, where you cross that break-even point and you start generating lots of cash. Well, they're going to need a lot of money to grow their business beyond that point, and that's where you start bringing in venture capital, private equity, and then when you go public, then you end up being in mutual funds.
Yeah.
So there are different players at different levels, at different stages of growth of a company.
I see. Yeah. So mutual funds are even beyond venture capital is what you're saying.
They can be.
They can be. Yeah.
Well, typically they are.
Yeah. And so, this just brings up the point, that I hear you guys say a lot, which is that angel investors are very important for startups, because no other fund is the right size for them, right? Or the right.
Right. We play in a very unique space in the economy.
Yeah.
They're the fertilizer for getting these young companies growing.
Yeah. Right. and that's so important for them. I see the response that you get from, working with the entrepreneurs that you do, and they're really grateful for you.
They are. And again, that's why they call them angels. It's because the people that need that funding and that support at that level, they're desperate, because there are not a whole lot of places that you can go that will take the chance on their business.
Aaron, have you ever heard where the angel investing came from? The derivation of that? It really started out on the big theater productions in New York City.
Yep.
Okay. I don't know, maybe in the 1800s or whenever it was. A lot of those startups never had enough money to get them going to build their production before they had a revenue generation. Yeah. It's nothing more than a young entity getting started. And there was always somebody that believed in them, that gave them the money that came out of the heavens, and they were called angels.
They were called angel investors.
High net worth individuals that funded the production of that specific event, typically a theatrical event.
That's cool. Yeah.
Not typically it could be an orchestra, but it would be a small orchestra associated with the production of that event.
Yeah.
But it was just to put on that event.
Okay.
And they probably took their money at the end of that event, cashed out. That was not unlike what angels do. So that's how the term angel came into being.
Oh, interesting. Okay.
Because they were the angels.
Yeah. Very cool. To anyone who's listening, I hope that gave you a lot of nuance about the differences between angel investing and mutual funds, which, is perhaps not as well understood as it could be. And, I think one of the things that I would stress is there's a very important place for both of these, both in economies and then in investors' portfolios. The gentlemen are very, very good at helping you see that.
And that's why we tell people they should only put about 10 to 15% of their portfolio in angel and type of investing. Right. It's higher risk, higher reward. The net result is you get more bucks for the bucks you put in. Yep. And some people therefore are comfortable going higher than that. but we don't encourage them to do that until they're really comfortable and they have other assets to fall back on.
Yeah.
And that brings up another difference that we didn't even mention is how liquid are these investments? Mutual funds are pretty liquid. In a given period of time, you can get your money out.
Yep.
Angel investing, on the other hand, you got to be committed from anywhere 3 to 7, 8 years for that investment, and it's not liquid. I mean, it is. You can, again, depending on what you invested in and what the terms are. But generally, you're going to put that money away for a while. So again, when you look at that pyramid, you also have to consider liquidity. What are your immediate needs for the next 3 years or 5 years? And try not to depend on your angel investments to cover those costs. And that's why, again, highly recommended that they only put in 10 or 15% of their net investable assets into angel investing.
And then you have the situation where you cannot become an angel investor theoretically unless you have $1 million net worth or income over $200,000 a year. You don't need both. It's either or. And that really is a restriction on who can be an angel, because they don't want little people playing around in it. You got to be a broker to guide these people. You don't need to be a broker to do angel investing. That's the difference.
I think that it's one way to ensure that you're only really putting a little bit in the top of the pyramid for that kind of thing.
Right. And again, I think the value, to be honest with you, is I think it's the involvement. I just love working with these entrepreneurs. They're so passionate, and they have such a tremendous opportunity in front of them because they're just starting. And again, managing a growth curve like this is challenging, but it's exciting as hell.
Well, so Jeff and Leon are always available to talk more about this, and reach out to them, and you won't be disappointed by the conversation you have, and further clarifying these distinctions. So we've been talking a little bit about the differences between mutual funds and angel investing with Jeff and Leon, who are the directors of the Wisconsin River Business Angels. And my name's Aaron, if I didn't introduce myself, and always enjoy my conversations with these two. So, all right, see you later.
Thanks for listening to Angel Impact, the official podcast of the Wisconsin River Business Angels. To learn more about the Wisconsin River Business Angels, visit the website at www.midwestwealthventures.com or find us on Facebook.